I had made the decision in 2019 that I was going to shut down my team. I was literally going to turn the engine off on the wholesaling business, but I wasn't quite sure what I wanted to transition into. And then when COVID came, it was an accelerator. It was a blessing in disguise because I'm like, I no longer want to shift and pivot, which were the words that were being used so frequently during that time. I'm like, man, I don't want to remake this transactional business.
Welcome to the Acquisitions Academy podcast. This is where we connect with business brokers, SBA lenders, exit consultants, and deal makers who are in the trenches of buying and selling businesses every single day. Our community of business owners are learning how to do deals, build wealth through acquisitions, and create passive income through joint ventures with our M&A partners. If you want to be a part of the conversation, join our free community at jvdeals.cbrcapitalgroup.com. Let's get into the show. Listener, you're in for a treat today. I'm here with my great friend, Alex Pardo, who has flipped over 750 houses. He's run a real estate investing business for over a decade. He had the Flip Empire Show podcast, now renamed it to the Storage Wins podcast. He also turned it into a coaching community where he's helping operators acquire their first self-storage facility. His thesis, cash flowing storage is the underrated path to freedom for everyday operators because it does not require tenants on leases, is recession resilient, and runs on simple operational rhythms. Alex, thanks so much for being here, brother.
Mike, always grateful to connect with you, man. Congrats on the show. I love what you and Elijah are doing. And man, I'm just excited for our conversation today.
Wow, man, thank you so much. It's always a breath of fresh air to, have a good conversation with a fellow front row dad. So
yeah, buddy.
And bring you over to, this community as well. So I want you to kind of take us back to maybe the moment where you made the shift, right? You were flipping, you had your podcast, made the transition, several years ago over to storage. Take us through that a little bit, just in case someone can relate a little bit.
Yeah, look, I mean, I got into real estate in 2005 after working a corporate job for a couple of years. And I got into real estate, Mike, I think for a lot of reasons that probably business owners and entrepreneurs that are watching and listening to this show, it's because we want freedom, right? We want more options. And one of the things I learned when I read Rich Dad Poor Dad and Think and Grow Rich, and I started immersing myself in all those personal development books, is that we need assets. And the reason we want assets is because we want that money working for us when we don't have to work. In other words, we want these assets producing income so that we're not necessarily limited and have a ceiling based on the time that we're working. And I got into real estate because I wanted those things, but yet I ended up playing the wrong game. I ended up getting into wholesaling and fix and flipping, which are great businesses to generate cash, but it requires me and my team to work. In other words, I got tired of starting the month from scratch at zero every single month. And I had big 6-figure months wholesaling and flipping real estate. And then I had goose eggs. And so I felt like I was constantly on this income roller coaster. Big months, bad months, hot seasons, cold seasons. And I remember in 2017, my wife and I were on a cruise. And at that point, I had built a team of about 9. And my monthly overhead had ballooned to roughly $45,000 a month, which meant that I had to close 2 deals just to break even. Before, just for the team to get fed, keep the lights on, so to speak. And I told my wife, I said, real estate's been great for us. We've made a lot of money, but it's transactional. It still requires me going out there and hustling deals. So we shifted and we started building a single family rental portfolio. I thought that owning rentals, Mike, was going to be my path to quote unquote passive income. And for anybody that's owned rental properties, you quickly find out that there's absolutely nothing passive about owning rentals. And I got to 5, so really modest, small portfolio. And I looked at my wife and I said, let's sell these things. It's not a cash flow play. It's more of an appreciation play over time. But if I don't want 5 tenants and 5 roofs and 5 utility bills and having to manage these, I certainly don't want 50 or 100. And when I did the math, Mike, I realized that I was going to have to own a lot of these rentals in order for it to really make a dent on the kind of lifestyle that I wanted to live and the things I wanted to do, the people I wanted to impact. And because I was hosting the Flip Empire Show, which I started back in 2016, and I had been coaching real estate investors going back to 2012, I happened to be coaching somebody that owned a storage facility. And brother, when you know this, man, when you coach somebody, you get an inside look into their business, what's working, what's not, You think about the strengths, the weaknesses, the opportunities, the threats. So I started to really like open my eyes to that asset class, and I was just completely blown away. I'm like, literally, this asset class under the umbrella of real estate has been under my nose the whole time, and I never even considered it. So I started to just learn more about the business, and I had made the decision in 2019 that I was going to shut down my team. I was literally going to like turn the engine off on the wholesaling business, but I wasn't quite sure what I wanted to transition into. And then when COVID came, it was an accelerator. It was a blessing in disguise because I'm like, I no longer want to shift and pivot, which were the words that were being used so frequently during that time. I'm like, man, I don't want to remake this transactional business. And a coach of mine just gave me insanely valuable advice at the time. He said, hey, before you go out and try to conquer the next mountain, just take some time to reflect, think back about what you really want. And one of the things, Mike, and I'm gonna wind this part of the intro down and kick it back over to you. But one of the things that I always look for when I'm looking at a business or evaluating an opportunity is I run it through, is it scalable? Does it have a low headache factor? Does it have high profit margins, low overhead, and can it be run remotely with automations? And as I ran that filter through the storage business and the asset class, it literally checked off every box. And I shut down the business, I want to say June of 2020. And it was December of 2020 when I completely shifted and transitioned into self-storage.
So if I say this phrase, self-storage is real estate backed by business, or is it self-storage is a business backed by real estate? Or are
It's a
those the
big,
exact same thing?
Well, no, they're not. One of the things I love about self-storage, and we could talk a lot about this, but it's a business that has the benefits of real estate. So when I say the benefits of real estate, what do I mean? Appreciation, depreciation, cash flow, tax benefits, all the things that we love about real estate, storage has, but storage is an actual business. As evidenced by the fact that my very first storage facility, which was a 43,000 square foot facility that I bought in Mississippi in 2021, I went out and I got a loan from the Small Business Administration for 85% of the purchase price. So SBA will loan, in fact, it's one of their favorite asset classes. There's a company called Live Oak Bank, which specializes in SBA financing for self-storage operators and self-storage businesses. To my knowledge, you cannot go get an SBA loan to go buy a house or to buy a portfolio of houses. So storage is a business that has the benefits of real estate.
Okay, so that's what we have found so far from my previous conversation with Kevin.
Yeah.
So
Great
that's
guy, by the way.
why he's awesome. So that's why I want to kind of park there for just a moment because the listeners here are trying to acquire their next business, and we want to kind of plead the case of why storage could potentially be a really great avenue for them. So if we
Yeah.
had to say for their next business to be storage, what would be like? And you just ran a retreat on this of like, hey, here's how you get started in self-storage. So I know a lot of this might
Yeah.
be behind the paywall. So thank you for being here, my friend,
No.
of kind of giving us some of the soup to nuts. Like, where would I begin? From the place of using other people's money to what I would need to leverage to who should I be in contact with? Where should I look? You know, if you just want to give us like a little bit of like that
Yeah.
rundown, of course, then seeded enough where a listener could be like, all right, I got to book a call with Alex, but also give us enough where it's like, oh shit, that was super valuable.
Yeah, dude. And look, the first thing I'll say is that there is no paywall here, man. Like all the information is out there. And so I'm not a gatekeeper. In fact, my core belief, and then I'm going to answer your question, is that, dude, I give everything away for free. If people want help with the implementation, that's where I can help in the community, but there is no paywall, so to speak. So ask me anything you want. It's a loaded question, and let me kind of zoom out for a second. Why self-storage? So I just shared a few reasons, but it's a very recession-resistant asset class. And don't take my word for it, but if you jump on AI, jump on Google if you still use it, and you research how the asset class has done during downturns in the economy, whether it's 2008 or otherwise, you will see that the storage asset class has done very well. Now, why is that? One of the reasons I believe, and I believe I'm so bullish on the asset class is Americans in general, like we're consumers. Like we buy stuff. I don't know about you, Mike. My wife, I got 4, 5, 6 Amazon packages coming to my house every day for crap we don't need, right? People tend to buy things. And when the economy's doing well, people are spending, people are buying things. and they upgrade their lifestyle. Oftentimes, because we're so attached to things, people go rent storage. When the economy contracts, what do people do? They downsize, but again, because they're so attached to things, they go rent storage. Now, when you think about storage, it's a nuisance expense, right? Generally speaking, people are paying 50 to 350 bucks a month. And for a lot of people, that's not going to break you. So people keep paying. The other thing I'd mention is that when you move into a storage unit, think about the pain of disconnect. In other words, if you rented one of my units, Mike, and you rented a 10 by 15 or a 10 by 20 space, moved all your stuff in, think about the time, energy, and effort it would take to move all your stuff out of the unit. Right? It's a little bit of a process. So it's a very sticky product. Not to mention, you don't have the typical tenants, toilets, long-term leases, things of that nature, which gives you a lot of flexibility. Now, to answer your question specifically, the first thing that I want people to understand is it's a mindset shift. You do not have to have money or even hundreds of thousands of dollars to go buy these assets. Okay, so regardless of your financial situation, don't filter if you should consider storage as a business or not based on where you're at right now in life. Every single storage deal that I've bought, Mike, has been structured using other people's money. And that doesn't just apply to storage. That really, I think, applies to any business. Take inventory of your particular skill sets, resources, assets, the gifts that you have, because you don't have to wear all the hats to get involved in a storage deal. I work with people, Mike, that are like you, man. They're great connectors. They have a deep circle. And so they can go out and be the connector. Like, hey, I know this guy, Alex Pardo, that is in the storage space, and like people will sometimes connect me with somebody who has capital. And they can carve out a piece of equity and or cash flow just for being the connector. I have other people I work with that are really good deal finders, and all they do is focus on finding the deals and then sending it to the operators, people like me. So jump into figure out what are your skill sets, your strengths, and understand that you can carve out a piece of these deals and get ownership by doubling down on your strengths. The next thing I'll share with people is just understand that storage deals reside on market or off market. If you jump on websites like Crexy.com, LoopNet.com, think of that like the commercial multiple listing service. That's where storage brokers and other brokers of asset classes will list these opportunities. You can simply go on there, create a filter based on what you're looking for, and start having conversations with brokers about these deals. I have done storage deals working with brokers on unlisted facilities. I also like to go direct to seller. So Mike, we can jump in 2 seconds. We can jump on Google Map and we can find mom and pop storage facilities. And we have people in our community that literally just cold call, or they have virtual assistants that will cold call these mom and pop storage owners. Direct mail is another way to go direct to the seller and find opportunities that are off market. So there's a lot of different ways that you can go out and find these opportunities. And there's a lot of different ways you can get involved. If you just want to be super passive and you don't care about running the operations, or you don't want to learn how to find these opportunities, then you can inject your money or your capital into these deals and get equity. We have somebody in our community that's involved in 33 or 34 storage deals. He uses his self-directed, a Roth IRA, to inject down payment money, and he will typically get anywhere between 25 and 50% equity in these deals, just by leveraging his self-directed account. So just understand big picture that there's a lot of different ways that you can get involved in the business.
All right. Well, that's why I'm the host of this podcast, because the shit that I get a chance to get a front row seat in learning is, so I'm going to ask a selfish question more for me.
Yeah, please do, man.
And you may have already answered this for me at some point. This is how slow of a learner I am. So if there's a public storage, like one of these like chains, I know you said mom and pop. Is there a rule of thumb that if there is a large chain near a mom and pop, that is not a good business to buy, or is that a good business to buy? And like, what's the distance that I would want to be from one of the commercial chains if I'm buying or interested in a mom and pop one?
Fantastic question. And that is not a newbie question. So you're not giving yourself nearly enough credit. You've been listening to Kevin, or you little something if you're asking that question. So look, I always hesitate to speak in absolutes. Generally speaking, you're correct. I do not want to buy a mom and pop storage facility near one of the big REITs. When I say REITs, they're real estate investment trust. The REITs are the ones like Public Storage, Extra Space, Cube Smart. Like those are some of the big REITs. I'm not competing with those guys. Those are beautiful Class A facilities. They play a completely different game. They have access to really cheap capital. And so I'm not arrogant or naive enough to believe that I can compete with those big operators because I can't. So to answer your question, yes, most of the time I am looking to be in smaller markets. Think of markets, Mike, that have like a population between 8,000 and 60,000 people. Okay. Usually, REITs are not going to go into those smaller markets. They want to be in the big metropolitan cities like Miami, Dallas, etc. Now, having said that, I said I'm not going to speak in absolutes because my first and third deal, 3 miles down the road, I had a Public Storage. But I got a really good deal and it was structured properly. I was buying it at the right price. And so there's a funny answer in storage that it depends. When somebody asks a question, it's like, well, it depends. And it really does. In storage, there's a lot of variables and factors. I tend to want to avoid being in a 5 mile radius with a REIT like a Public Storage, unless I'm buying it at the right price or terms and it makes sense to go in there. So hopefully that answers your question.
Yeah. So it does. It does. And let's say we find one of those. We find one of those opportunities, let's say. Now what? Like I contact Kevin and I talked a little bit about seller financing. So listener, you
Yep.
could go to, Kevin's episode. We talked a little bit about that, but if you want to speak on that, you could. We obviously want to talk about capital stack. We want to talk about like the seller terms, maybe how we want to structure some of those offers, potentially what we're looking for, what's a go or versus a no go. I mean, there's
Yeah.
so many questions that could show up on this, like during this conversation. So how would I know if it's something worth pursuing? I guess is an
Yeah.
interesting question.
Yeah. I so wish we could whiteboard this because it'd be a lot easier to walk you through some basic back of the napkin math. But big picture, here's all we're looking to do. I'm looking for the gap, the delta, or the biggest change between what are the current rates for that storage facility and what is the average of the market rates in that market. Okay, so when I look at storage, think about storage in a 5 mile radius. Why? Because most of the time, customers that are looking to rent storage are looking for convenience. They're looking for safety. They're looking for certain things. They're not driving 45 minutes to an hour away from where they live to go rent a facility. So the first thing to understand is when we're looking at a storage facility, your competition is going to reside within a 5 mile radius, let's just call it. All right. Now, when I look at an opportunity, I'm looking at, okay, Mike, let's say you own the ABC storage and I asked you about your unit mix. The unit mix is like, okay, I have X amount of 5x5s, 5x10s, 10x20s. I'm going to ask you your current rates. Now, let's say you have a 10x10 that you're charging $50 a month for. But when I jump on Google Maps and I pull up all of your competitors in a 5 mile radius, I realize that the average of the 10x10 rates are $85 a month. But you're at 50. Well, I know that if I were to buy your facility at the right price or terms, and we can talk about what that might look like, then that's a very simple value add opportunity where I could immediately, almost from day one, go in there and raise the rates at or right below the average of the market rates. That instantly adds significant value to the business because in self-storage, the value isn't based on comparable sales like it is on a single family home. The value is based on the net operating income. What does that mean? The value is determined by the income the asset produces. So if I'm able to go in there and raise the rates $20 or $30 across multiple units, and then you annualize that and apply something called a cap rate, which I don't want to get too in the weeds, it has a multiple or an exponential effect on the overall value of the facility. So let me give you simple math here, dude. Let's say we had 100 units. And just to keep the math simple, I was able to raise the rates $20 a month for those 100 units. In this hypothetical, I'm talking about 100 units that are filled. Now, to your point, that's one of the things we evaluate. That's one of the various factors that we look at. It's okay, what's the current occupancy and what is the income the asset is producing today versus what is the potential income that asset could produce if it were at 85 or 90% occupancy.
Got it.
I never assume 100% occupancy because that means you're just not charging enough. So conservatively, I like to be between 85 and 90% occupancy. And I'm looking for that gap in income. Okay, it's currently producing X annually, but if I raise the rates and I did certain what we call value add opportunities, if I did certain easy things, the value should be this. The income it should be producing is it's X, but it should be at Y. That is the value that I'm looking to create. Now, I'm not paying the pro forma, but I'm buying it because of the value I can create, if that makes sense. So in this hypothetical, we got 100 units and I'm able to raise the rates $20 a month. So that's $2,000 a month. If I annualize it, 2,000 times 12 months, that's $24,000 in value that I've created per year. Now, if I take that 24,000 and I divide it by a very modest or conservative 8 cap, a cap rate basically is just an expression of value. It's the return that you would get if you bought the facility with cash. If you take 24,000 divided by 8%, I've just added $300,000 in value to that facility by going in and raising the rates $20 a month. That's it. All I've done is sent a simple letter out to the customer base 30 days before I plan on raising the rates. Yes, there's probably going to be some people that leave, but if they look at the competitors and they say, well, the competitors are at 80 or 85, but Alex just raised me to 70, are they really going to leave? Probably not. So that is just a simple mathematical example of how raising the rates can add significant value to the business. And that's what we're looking for. We're looking for what's the income the asset is producing today? What could it be producing? What is the gross potential rental income?
Okay, we're going to take a quick break, but when we come back, I want to ask you about operating one of these.
Yeah.
And I also want to talk about what we could do are we focusing on exiting, like flipping this and selling this storage facility, or are we looking to operate it as cash flow? So we'll be right back. You are listening to the Acquisitions Academy podcast. If you're a business broker, SBA lender, exit consultant, or just someone who's in the deal-making world and you want to connect with a community of business owners who are actively learning how to acquire businesses and build wealth through joint ventures, join us. It's free, no cost to you. jvdeals.cbrcapitalgroup.com. All right, back to the conversation. Alex, so those are the two questions that I have. That might be the last two questions. I don't know. We'll see how we're doing on time and how long this takes. But what does it take to operate the business? And also, am I looking to acquire one of these to flip it and sell it for what you just said with that cap rate? Okay, I added $300,000 in value. Ooh, now I can make an extra cash and then go buy my next one. Like, kind of speak to that. What is the strategy? Or if it's a both end, what would be the reasons I would approach either of those scenarios?
Let me answer the second question first, and then I'll talk about the different ways that you can operate this business remotely. Okay. You always want to determine the exit before you enter the deal. What do I mean by that? Before I sign in the dotted line and buy this business, buy this storage facility, I need a game plan. Based on the asset, I always ask myself, is this a cash flow play? And my intention is to hold this for a certain period of time because of the cash flow. Is it an upside play? Meaning I want to go in there, create the value, and then turn around and sell it, or do a cash out refinance. Okay, I know a lot of people that will their entire exit strategy is to create the value, go to a bank and do a cash out refi, because why? When they take out that cash, it's a loan, it's debt. So they're not taxed on that. And they take that money, whatever they're cashing out, and they go put it into another facility, and that's how they grow. My first and third facility, Mike, it was in a kind of a rough market in Mississippi. I knew that I didn't want to be there long term, but I was buying it at such a good price. And the second one, I got it on really, really good terms, that my entire strategy was not to generate cash flow. It was to go in there, increase the occupancy, increase the revenue and the net operating income, and within an 18 to 36 month period, turn around and sell that facility for a significant profit. That's exactly what I executed. But I determined that before I bought it. And then I have other facilities where it's in a great market, it's a great cash flow play, it's easy to manage and operate. And so, no, I will look to hold that long term. And then I'm always evaluating based on the equity that I have trapped in that asset. Does it make sense to sell and then put that equity somewhere else? Or do I want to continue to manage and operate? So The not so short answer to your question is it really depends on your goals. One of the things I always walk our Storage Wins members through is something called the buy box blueprint, which we created a simple custom GPT that if they follow the prompts in 5 to 7 minutes, it'll give you a 1 page buy box blueprint based on your specific goals. It'll tell you what to look for in what markets, what size deal, and that all helps filter why you're buying a potential storage facility in the first place. Is it for cash flow? Is it to turn around and sell it? Do you want to do a cash out refi? So there's it's an it depends answer based on what the person is looking for.
So one of the things that show up for me is if someone is already a couple stages ahead on the storage thing and someone's listening and they don't want to necessarily do too much due diligence, and you have a student that's like created this storage facility, added the value, and now it's worth more.
Mhm.
And their game was, I wanted to get a larger amount of capital like now. Like I
Yep.
wanted to add the value, get the capital. So I bought it at 700, now it's worth 1 million. And then the
Yep.
person comes in and says, okay, it's worth 1 million, but it's cash flowing way better than any of the other assets that I want. Now that could be a deal that one of the members of our community acquisitions academy say, cool, we'll go buy that facility from you because we're
Yeah.
looking for a cash flowing asset while you were just looking for an asset that you could add value and get the large chunk and then go buy your next thing. Am I seeing this
Mike,
correctly?
you're spot on. There's a lot of people that don't want to go in and create the value because that is work. You got to go in there, you got to do certain things. There's people that would just want to place their capital and they're getting X amount cash on cash return, or they're getting X amount, whatever metrics, like cash on cash return is usually one of the metrics we look at. We put X amount of cash into a deal. What cash does comes back into my pocket on an annual basis?
So is that
But
a collaboration that exists? Like, do you is that something that exists in the marketplace in general, where it's like I got this pool of investors who don't want to like do the fix and stuff, and I got a pool of deals of people who've already done the fix and you just coordinate this.
yeah, that's one of the things that we go out there and we build relationships with people. And whether I'm talking to somebody who's looking to buy a storage facility or I'm talking to a potential lender or a potential equity partner, I'm always asking the first question, what is your goal and what are you looking to accomplish?
Yeah,
That will help determine what potential deals I put in front of them.
love this. All right, cool.
Yeah.
Keep going. So
Yeah.
tell me about operating one of these.
Operations. Okay, there's a couple common ways that you can operate these facilities. You can every now here's the common denominator, the common thread with every storage facility I've bought, that Storage Wins coaching clients have bought, and friends who have bought. Every single facility is going to have a local boots on the ground team member. This person is an independent contractor. They get paid anywhere, and you're not going to believe me when I tell you this, but it's the truth. They get paid anywhere between $200 and $600 per month to be the boots on the ground. Now, before anybody thinks I'm running like a storage sweatshop, I'm not. These people are working 5 to 10 hours a week at most. Their job is very simple. They go to the facility once, maybe twice a month. They're doing lock audits. They clean out units. They take pictures for the auctions when people don't pay. So their job is very simple. And so every facility has a local boots on the ground team member. If the facility generates enough revenue, which is what I look for, then you can plug in a third party storage management company. So I work with a third party management company that handles the day to day operations of the business. They have a call center. So when somebody wants to rent a unit, I'm not speaking to them. They're calling the call center, or they're taking a picture of the QR code and they're going straight to our website where they can rent a unit online. Okay. The third party management company is what allows me to have that time freedom I seek, to have multiple facilities in any part of the country and not have to be necessarily tied to the business. Now, as with anything, you still have to manage the manager. It's not passive. It's not like completely hands off, but they do most of the heavy lifting. Like about a year and a half ago, prior to me selling a portion of my portfolio, I owned 4 facilities across 100,004 square feet. Mike, maybe I would spend an hour and a half to 2 hours a week on that portfolio. And that's because of the third party management company. The second way, if the facility is smaller and it doesn't generate enough revenue to support the expense of a third party manager, then you are going to be the one, or somebody in your team is going to be the one responsible for managing the boots on the ground team member. Operations of a storage business is pretty simple, but if you're going to be involved in the management, it's a little bit more time intensive, not much, but a little bit more than if you had third party management.
And if I'm going to be running one of these, obviously would I want to set this up as if I'm going to try to run it, or what, like trying to hire these team? Like, does that increase the value, I assume, regardless of whether I'm trying to own it or sell it?
Yeah, I you're gonna think I'm like being facetious, but I guess it really depends on your goals. Like for me, storage is not the only business I'm involved in. I love coaching, I love leading communities and facilitating. So for me, I look for deals big enough where I can plug in third party management because I don't want to bring management in house. I don't want to hire a team. I don't want to manage the boots on the ground team member. I have Storage Wins coaching clients that have no interest in coaching. Storage is their primary business and they're building things in house. So the answer to your question is it really depends on your situation, your goals, and what you're looking to accomplish. Either way is super viable. Either way can be really, really profitable. So there isn't one is better than the other. It's more, it depends on the person.
Very interesting. Man, there is so much to learn here, just from you and Kevin already, and I want to have more conversations with people in the storage space. So you might have to make some introductions for me,
I
man,
got you, brother. I got
because
you.
this is great. Um, is there anything, I know we're coming towards the end here? Is there anything I did not ask you that you're like, because I want to hear about your coaching program. I want you to, pitch, just help us understand what's
Yeah.
happening there. But is there anything I didn't ask you that you're like, you probably should have asked me this, or we should have talked about this, knowing the audience that we're speaking to right now, trying to get their next deal or their first deal?
Dude, not to give you flowers or blow smoke, you're really good at what you do and you ask fantastic questions. I don't know that anything comes to mind, Mike, that you're like, oh, dude, you should have asked me this. But the biggest thing I want people to walk away with is just to expand their mindset. Oftentimes, I speak to people that they overcomplicate the storage business in their head. They create a story about what they think they need or what it takes in order to be successful here. And oftentimes it's wrong. Like the belief that I need a lot of money to go buy these deals, the belief that I need to invest 40 hours a week to be successful. That's just not the case. And then if you take it a step further and people walk away from this podcast thinking to myself, hey, I don't have to wear all the hats and be all things to all parts of the deal, but I can double down on this particular strength or skill set I have. Figure out how you can find an opportunity or look at an opportunity and like, where can I add the value to carve out a piece of equity or cash flow, or maybe just cash up front for whatever it is that you're bringing to the deal. So, like you said, man, there's a lot to learn, but at the end of the day, I've explained storage to my now 9 and soon to be 11-year-old daughter. And basically, it comes down to every business needs leads and prospects. So you got to find the deals and have a system around that. The entire business, Mike, is built on the backbone of relationships. So meaningful conversations with storage owners, brokers, and wholesalers. We learn how to analyze deals. And so we analyze deals. We have to look through quite a few before we find the right one. And we make offers. And that is pretty much the 4 pillars of like the deal discovery phase that we take people through.
Man, well, I'm sure people are going to want to stay in touch at some point in time. They listen to this episode. Where could they learn more about you or stay in touch with the community, storage
Yeah.
wins? Like, what
Yeah,
does that look
man.
like?
So I appreciate again the opportunity. So I put out a lot of content, Mike, as you know, about self storage. So the Storage Wins podcast is on Apple and Spotify. So I put out 2 episodes a week on the podcast there, and then on YouTube I usually put out 2 to 3 videos a week. And if you just search Alex Pardo, my name on YouTube, you should find my channel. And yeah, if you're interested in learning more, like again, there is no paywall. Like I literally put it all out there. I created a course, Mike, that the intention was to sell. And after I spent a lot of time, money creating it, I realized this is going to be a distraction to go sell a course. So I'm literally giving it away for free, including all the tools and resources. So if you go to cashflowmaps.com, cashflowmaps.com, you don't have to take out your credit card. You literally just create an account and you'll have access to the entire training.
And this is what I'm seeing on my screen. Is this the right spot?
That's the right one. You got it.
Cool. So if anybody's on YouTube watching this, this is what it looks like. What an awesome asset. So just put in our information and here
Yeah.
you are. That's great, man. Thank
Yeah.
you.
The only way you're paying for it is with your name and email. Outside of that, like you don't, there's no cost to it.
Yeah, that's great. Well, I really appreciate this, and thank you so much, Alex, just for sharing your wisdom, sharing your knowledge, and hopefully, some members of our community at Acquisitions Academy are going to stay in touch with you and just continue to learn. And if they don't, then they should. So
I appreciate
this is
it.
great, man.
Yeah.
Thank you. And
Of
listener,
course, man.
thank you obviously for listening to the show and supporting and being a member of our community. We want to just continue to add value to you. So thanks for being here, and we look forward to you on the next episode. That's a wrap on this episode of the Acquisitions Academy podcast. If today's conversation got you thinking about deals, partnerships, or your next move in the acquisition space, join our free community at jvdeals.cbrcapitalgroup.com. Connect with other business owners, submit deals, and stay plugged into what we're building. We'll see you on the next one.